report and statements of financial transaction. So yesterday we have a detailed discussion on the topics by advocates and our chartered accountants. Probably we feel that entire session yesterday, which has been conducted, very useful for our speakers. So today we will start with our these couple of topics with a couple of speakers. So we'll start with our motto song. Sir Kishore sir, please.
Yeah. Let me play this motto song.
So you need not stand. As a matter of respect, please place your right hand on your heart.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनाद्यति कश्चन एतद्वैता 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 एतद्वैता.
Thank you, sir. So before we start the session, let me introduce both the speakers of today. So both of the speakers are very close to Vijayawada branch. One of the speaker is past chairman of Vijayawada branch, M.R. Prasad Garu, and other speaker is Nitta Ravikishore Garu, currently vice chairman of the branch. So let me introduce both of them at a time. Let me read out the profile of M.R. Prasad Garu initially. So M.R. Prasad Garu started his practice in 1986. In 1981, he has completed his BCom from Andhra University, A&R College. In 1985, he cleared his chartered accountancy from ICAI. In 1986, he cleared Intermediate of Company Secretary from Institute of Company Secretaries of India. In 2003, from the Institute of Insurance of India, he has cleared an Associate of Exam. In 2003, he has completed ESA from our ICAI. In 2004, he has cleared Computerized Accounting and Audit Techniques from ICAI. In 2005, he has cleared an American Quality and Environmental Group IATCA QMS Lead Auditor Training Course. And in 2008, he became the fellow member of Institution of Valuers. In 2008, Institute of Insurance Surveyors and Loss Assessors, he became an associate member. In 2013, he cleared a certificate on concurrent audit course from our ICAI. 2014, he has cleared he's become a registered valuer under Chief Commission of Income Tax to Hyderabad. In 2015, from the Institute of Banking and Finance, Mumbai, he has become a debt recovery agent. In 2017, from 2017, he is learning GST, insolvency, and bankruptcy code. So coming to his contributions, he is a resource person for continuous professional education programs to the members, students of the Institute of Chartered Accountants of India on Investor Awareness Program, certificate course on concurrent audits, and cooperative societies. He has taught 2 batches on income tax for the income students of A&R College, and he has contributed several articles to online publishers like CA Club, India.com, TraxGuru.com, CS Ansar, and other matters of professional interest. Contributed to news, he contributed news and short articles on tax matters on local dailies and in the local city cable as well. Addressed members of Rotary Club, IMA, walkers on tax matters, gave training on income tax and TDS to SBI, KDDC and other bank managers. Positions he has held. So he is a vice chairman of Vijayawada branch of SARCF ICAI, is a professional director of Gudivada Cooperative Urban Bank Limited Gudivada, and vice president of ANR College Old Students Association Gudivada. Is a trustee and treasurer of VBCM Trust Addada, and endowments created for the best MCOM students of ANR College for the best presented accounts of Gudivada Division Accounts and Association, hence their association. So this is a short profile of M.R. Prasad Garu. And apart from this profile, I just want to share a couple of things about sir. So recently we have conducted several career counseling programs in Gudivada. Last year, from last 8 to 9 months, he is like spent so much time of his professional, he has took out the professional time and spent the time for students of CA students. So when I had a word with sir told that, so I want to see more than 100 people coming from Gudivada and clearing their CA exams. So sir, thank you very much, sir, for your dedication towards our students' fraternity and inculcating them about our course in their academic career. So by this, I really applaud the contributions made by our past chairman, M.R. Prasad Garu. And let me introduce about our vice chairman Garu, Netta Ravikishore sir. So before going into his profile, straight away, I just want to tell a couple of things about sir. So he is in our managing committee. I know I'm in managing committee from last 2 years. Sir is there from last 5 years. So he is a mentor for all the other fellow members. Whatever may be the position he is currently in, that may be a treasurer or SICASA chairman or secretary of the bench. So whatever the position or whatever may be the issue which we are facing, the first person, go-to person is N.R. Ravikishore Garu. So I just want to share one more thing about sir as well. Once we spend some time with sir, so we have an opportunity to spend time together as we are in the same committee. First, for example, if we spend time around 1.5 hours with him, we observe that he will be receiving more than 2-3 calls in 1.5 hour time. Any member or from Vijayawada or some other places used to call him for doubts. So we call him like whoever person calls him, he clears his doubt. If he is also not aware of the query posted by the member, within no time, he will go and research on that and also deliver the answer to the person who called him. So we call him as an encyclopedia of tax and other matters and in the matters of practice. Along with, he is having his own YouTube channel with more than 5,000 followers. So let me introduce now professionally. He's Netta Ravikishore is a fellow member of the Institute of Chartered Accountants of India. He is practicing from last 25 years. He is also a member of Institute of Cost and Management Accounts of India. He holds diploma in Information System Audit and honors in System Management. He is currently he is faculty for Direct Tax and Indirect Tax for the last several years and was also a faculty for auditing for some years. He speaks on seminars organized by branches of ICAI, colleges, and various trade bodies about current and emerging topics. He is faculty for orientation program of new qualified cost accountants. He is also a YouTuber. His videos are watched by thousands of viewers. He is elected to the managing committee of Vijayawada branch of SARCF ICAI for 2 consecutive terms, 2019 and 22 and 22 and 25. For the year 23-24, he is the vice chairman of the Vijayawada branch of SARCF ICAI. He is currently vice chairman of tax committee of AP Chamber of Commerce and Industry Federation, a state level body. So by this couple of introductions, sir, NRK sir, I leave the rest of the things to you. Thank you, sir. Thank you for sharing your views, sir.
Thank you. Thank you, Jayant Garu. So very much delighted with that introduction. So friends, today's topic might session will be on statement of financial transactions, annual information statement or annual information report, and CIB codes. So friends, yesterday and today's topics or sessions, virtual sessions, are mainly aimed at section 148, be it 148A, various subclauses, or 147, and the tax rates, the sections, what are all these sections which are invoked in order to levy tax on those income escaping assessments. So friends, first of all, in order to issue section 148 or for making a reassessment under section 147, what actually, as per the amended law, an inquiry is to be made under section 148A. Now, after the inquiry is made and the assessing officer, based on certain information in his possession, is satisfied that income has escaped assessment, then he will issue notice under section 148. Of course, there are time limits for issue of various notices, but the first and foremost thing is the assessing officer should believe that a certain income has escaped assessment based on certain information available with them. Under the old law also, whenever the assessee asks for the reasons for which the assessment is reopened, the assessing officer is bound to furnish that information which is in his possession. So the first and foremost thing which will attract the proceedings is that certain information is available. Now, how will the department will get that certain information? Based upon which the assessing officer may come to a conclusion that income has escaped assessment. So information is a must. Now, the income tax department will collect the information from various sources. In 1975, the income tax department has formed the Central Information Branch. Now, what is the purpose for which? So whenever you may receive a notice under section 148 or 148A, that in a tabular format, you will be given certain codes on the leftmost column of that table. In that you may get something called as a CIB dash and some number. So that is the information collected by Central Information Branch, CIB. The full form of CIB is a Central Information Branch. Now this branch was formed way back in the 1975 to strengthen tax database. Initially, in the nascent stages of formation of this CIB operated under the supervision of a DGIT investigation. Later on in the year 2007, this was brought under a Director of Income Tax Intelligence. This was brought under Director of Intelligence, Director of Income Tax Intelligence. Now, in order to strengthen the tax database, actually the world is changing in a very fast pace. Now, India also increasingly got integrated with various foreign economies because of liberalization and movement of people. Now, the capital started flowing outside India, the capital started flowing into India. However, there is certain pressure on the financial institutions as well as the tax havens from all over the world to confirm the new norms regarding exchange of information and greater transparency in the cross-border financial institutions. So not only the domestic transactions are to be kept an eye on, but also the cross-border transactions should also be monitored. Now, in August 2011, a new directorate named Directorate of Income Tax, Intelligence and Criminal Investigation was set up under DGIT, Director General Income Tax. Now you have a new section or a new section of the Income Tax Department, wherein in August 2011, the Directorate of Income Tax, Intelligence and Criminal Investigation is being set up. Right? Now there are 18 field formations under this directorate. Now, why are we talking about all these history or background of this thing? Because in order to understand as to the way in which the Income Tax Department collects the information from various sources, it is very much essential on our part to understand what is the background and a brief history of this CIB, right? Now, these intelligence units are Directorate of Income Tax, Intelligence and Criminal Investigation has certain 18 field formations. Now, which includes 9 DSITs, Intelligence and Criminal Investigations. These 9 units are situated at Ahmedabad, Chandigarh, Delhi, Chennai, Jaipur, Kolkata, Lucknow, Mumbai, Nagpur. Another 9. Now, the whatever 9 which I have told you are DITs, Intelligence and Criminal Investigations. There are 9 other units which are only DITs, Intelligence. Now, these are situated at Bangalore, Bhubaneswar, Bhopal, Guwahati, Hyderabad, Kochi, Kanpur, Pune and Patna. Also, you have DIT administration, which will be functioning directly under DGIT. Now, what are all the areas or core areas for which these units will be working? Now, this DCI is a nodal agency of Income Tax Department. The purpose or the main objective is to strengthen tax database. Now, what are all the key function areas which they will be working upon? They will be working upon widening of tax base. Now, what they will do in order to increase the tax base, they will identify the stop filers and non-filers. Previously, an SSE might have filed income tax returns for certain period. But later on, what has happened is for one reason or other, he has stopped filing the income tax returns. He is a stop filer. Now he will be identified. And also, there may be certain category of people who might be earning income, which may be chargeable to tax. But what they are doing is they are not at all complying with the law. They are not furnishing their return of incomes. Another thing is deepening of tax base by providing information for proper selection of cases for scrutiny assessment. There are a set of people who are filing their return of income, but might not be disclosing all the taxable income which is subjected to tax. Now, how can these people be found out, and how can the tax, the income which is not subjected to tax will be brought into the tax network? So deepening of the tax base for which they will be scrutinizing. So there should be a system wherein in order to identify the people who may not be disclosing their entire income. So towards that goal also, this department or section will be working upon. And also what these people will be doing is they will be collecting information from internal as well as external sources, and they will disseminate the information to the assessing officers and other users of the IT department. They will also collect the information relating to financial transactions like investments, expenses, payment of taxes, etc. Suppose a person might be paying customs duty, a person may be paying the GST or some other like taxes. But that person may not be filing, or that person may not be offering that turnover on, may not be, or may be offering a less turnover than the turnover which is being subjected to tax in other indirect taxes. So they will be collecting all these type of information and they will be disseminating to the users of the IT department as well as the assessing officer. Now they also provide for identification and investigation of cases of tax evasion, which may arise out of criminal matters and also may be having any financial implication punishable as an offense under the direct tax laws. So some people might be involved in tax evasion, and that too, that may be arising out of criminal matters. Now, such transactions may even attract the penalties under the direct taxes. So these people, what they will be doing is, they will be finding out that those type of transactions. This is CIB, Central Information Branch. Now, of late, what they have done is, they have worked upon a project called, and it is nomenclated as a Project Insight. Now, this project is initiated towards achieving or focusing on 3 goals. What are the 3 goals for which this Project Insight is being initiated? One is to promote voluntary compliance and deter non-compliance, and to impart confidence that all eligible persons pay appropriate tax, and to promote fair and judicious tax administration. So what they have done is, under this project, an integrated data warehouse and business intelligence platform is rolled out in a phased manner. All of you might have browsed through the reporting portal. This reporting portal is a part of this Project Insight. Now, what this project operations, for the purpose of achieving the objectives of this project, what they have done is, they have operationalized 2 new centers called Income Tax Transaction Analysis Center and Compliance Management Centralized Processing Center. So I will repeat these 2 centers, namely Income Tax Transaction Analysis Center and Compliance Management Centralized Processing Center. Now, this Income Tax Transaction Analysis Center leverages the data analytics in tax administration and perform tasks which are related to data integration, data processing, data quality monitoring, data warehousing, master data management, data analytics, web or text mining, alert generation, compliance management, enterprise reporting, and research support. All these things will be done by the center named Income Tax Transaction Analysis Center. Now, there is another center under this project called as Compliance Management Centralized Processing Center. Now, what this center does, it uses campaign management approach. Means it will be communicating through emails, SMSs, reminders, outbound calls, letters. So why are all these emails, SMS? Now, some people might come to you stating that they have received an SMS stating that you have entered into high value transaction. If you have not filed the return of income, file the return of income within so and so date. Now, how come that person has received that SMS? Some people might be receiving email communication. Some may be receiving the SMS alerts. Some people may even get the calls, or some people may even get the letters from the jurisdictional office. So now how they are getting these things? Now this compliance management centralized processing center based upon the available data and the data which is already being processed by another cell. Now they will be sending these type of alerts. Now what is the purpose for which these type of alerts are sent? These are sent to support the voluntary compliance and resolution of compliance issues. The compliance management centralized processing center. Let us say somebody gets a alert that he has made certain cash deposits or he has entered into a transaction of a transfer of an immovable property. Now this fellow will get a SMS and that person will be asked to go into the compliance portal and give a reply there. Now the person has to log into his account, register himself. If not registered, log in, and then what he has to do is wherever that information is populated, he has to give the compliance. Now it will be having a drop down. Let us say, does this transaction belong to you? Yes or no? If it is no, you have to give the reason. Or if you, have you filed the return of income? Yes or no? No. Why you have not filed the return? Does the transaction belong to you? That does transaction is a duplicate entry. That does transaction relate to another PAN number. So these type of compliances, once they get those type of responses, what they will be doing is they will be processing that responses in a structured manner and for purpose of achieving effective compliance and monitoring evaluation. Now, as a part of this project Insight, we have something called as a reporting portal, as we have discussed earlier. Now, this is one of the critical component of Insight platform. What this reporting portal will do, it will collect information from the reporting entities. Now, certain entities are vested with the responsibility under the income tax law to report certain transactions which they have entered into. Now, this portal can be accessed through report.insight.gov.in. Now, it has been designed as an integral portal for all third-party reporting activities. Who is the third party? One party is the department, one party is the SSE. So apart from the SSE and the department, there is another person, third party, wherein the SSE has entered into a transaction with that third party. That third party will directly report to the income tax department with respect to the transactions which have been entered into by the SSE. Now, the reporting portal will also provide certain enhancement like seamless data processing and quality monitoring, data encryption for enhanced security, seamless exchange of information with the reporting entities, comprehensive resource module for capacity building, seamless reporting, entity compliance management, and dedicated help desk. Now, friends, let me, now this is the background. This is the background. You are getting 148A notice or 148 notice. Why you are getting? The assessing officer believes that income chargeable to tax has escaped assessment. Now, he may be coming to that conclusion because he is in possession of certain information. Where from he is getting such information? Now we have looked into the background. Now let me share you the screen for certain CIB codes, Central Information Branch codes. Let me share the screen. Now, what are all the, just a second, let me share the screen. Yes. Now, this central information branch, the Central Information Branch. Give me a second. Yes. This Central Information Branch collects certain data. For instance, what are all those transactions which will be captured by these people? Now, on the left-hand side, you have the code numbers, and each code represent a type of information. Let us say a dealer of a motor car, if he sells motor cars to someone, that person has to give the information with regard to the sale of motor vehicle. Of course, all motor vehicle sales are not captured. You already know that if the cost of the vehicle exceeds 10 lakhs of rupees, that transaction will be captured. Transfer of immovable property. If certain threshold is crossed, the information will be collected. Transfer of capital assets where value declared for the purpose of stamp duty is more than the sale value. You all know that where the stamp duty value exceeds the fair market value, then the stamp duty value will be deemed to be the full value of consideration. Of course, certain small threshold limits are there here and there. And if the stamp duty value exceeds the full value of consideration, for the person who is making the transfer, he has to offer stamp duty value as the full value of consideration. And for the person transferee or the person who buys that asset, immovable property, for him the difference amount will be treated as income from other sources. Of course, the difference amount will be chargeable both in the hands of the transferor and the transferee. That you very well know. So, how does the income tax officer come to know that this person who has transferred the capital asset, in respect of that transaction, the fair market value is less than the stamp duty value? So the information will be gathered by the income tax department by this Central Information Branch. Purchase of immovable property valued at 5 lakhs or more. Some of us are of the opinion or notion that only transactions of immovable property in excess of 30 lakhs only will be captured. Now that capturing of data is different. That is through SFT. There the threshold limit is 30 lakhs. But under CIB, there is also a chance that in respect of a person who has purchased immovable property of more than 5 lakhs or 5 lakhs or more, that transaction will also be captured. That we have to understand. If you are making a time deposit of 1 lakh or more, purchase of bank deposit of 50,000 or more, share transaction more than 20,000, fixed deposit exceeding at 2 lakhs, payment made against credit card at 2 lakhs. Now, one of the recent issues what we are facing is, these people, what they are doing is, the retailer or some wholesaler, these people are purchasing from this Metro or Reliance Retail from those type of people. Now what these people are doing is they are paying to credit card. Now these credit card bill will be more than 1 crore or 50 lakhs or as the case may be. Now these transactions get recorded. These transactions get recorded to exchange of information, that is Central Information Branch. Now, cash deposit aggregating to rupees 2 lakhs on a single day. Now, the income tax department gathers information from various sources. It may so happen that sometimes the information which has been populated in respect of an SSE, in that information you may have some duplicates also. One information gathered will be payment made against our cash deposit aggregating to 2 lakhs in a day. There might be another type of reporting somewhere under SFT, wherein during a year in a savings bank account, where the aggregate of deposits exceeds 10 lakhs. Now, what will happen is the data will be captured here as well as the data will be captured there. Here, duplication has happened. Now, because of use of artificial intelligence, sometimes what is happening is the system, the compliance portal itself is identifying the duplicate data, and one of the duplicate entry is being deactivated and the other is kept as active entry. Now, it may also sometimes happen that the duplication might not be recognized by the artificial intelligence tools that are being deployed at the reporting or compliance portals or those processing centers which we have earlier discussed. Now, in those type of situations, the SSE has an option to go into the compliance portal, identify that transaction and mark it as a duplicate. That can be done. And it will be dropped once it has been examined or cross-verified by the concerned persons. Now, you have entered into a contract of 10 lakhs or more in a commodity exchange. All of us practitioners, our SSEs may not be, or our clients may not be disclosed all the information or all the transactions which they have entered into. One such transactions which are not informed to the tax practitioner is or a classic example is that of transactions in shares or commodities or derivatives. Of course, for the last 2 years, thanks to the AIS statement, wherein any transaction which is entered into by the SSE, either purchase or sale of mutual funds or transactions in the stock exchange or commodities exchange, they are disclosed in the AIS. And of course, the tax practitioners are advising the clients and requesting them the details of such transactions, including them in their income tax returns, and wherever tax is to be paid, that has been paid and returns are being filed. So previously what used to happen is, but for this AIS information, prior to the introduction of AIS information or 26 AIS, where these type of transactions are not reported, nonetheless, the department gets such information. But either the tax practitioner or the SSE is aware, but he won't be disclosing, he may or may not disclose the information or fact. But after 2 or 3 years of filing of the tax returns, based on the information received by the income tax department, that person may be issued a notice. Now, then the stringent provisions of the Income Tax Act with regard to this income escaping assessment, penalties, higher rate of taxes, etc. will follow. So, nowadays, by the introduction of AIS, even though the information is being gathered from various sources, there might be some duplications, but nonetheless, by the time the SSE is going to file the return of income, certain all transactions which are entered into by the SSE or at the disposal of the tax practitioner or the SSE, and what are all the transactions which will have the tax implication will be taken care at the time of filing the return of income. Thereby, the repercussions that may follow for non-compliance is being safeguarded. Now, also interest paid by cooperative credit society, payment in connection with a foreign travel of 1 lakh, payment to a hotel or restaurant of 1 lakh or more. Now, these are all the transactions entered into by the SSE that have been captured by the Central Information Branch, and this information will be disseminated to the field formations, and thereupon the SSEs may be forced to comply with the law. Now, this type of information, if in the possession of the assessing officer, not reported by the SSE, may lead to section 148A notice, or for that matter, section 148. Now, apart from this CIB information, there are also certain other informations which will be gathered by the income tax department. Now, these information is gathered by third party reporting. There is something called as a statement of financial transaction or a reportable account, through which the form number 61A is to be furnished by the reporting SSE or reporting entity. They call it as reporting entity. Not only that, there are certain transactions for which the SSE has to furnish the PAN number at the time of entering into such a transaction. If the person entering into that transaction is not in possession of the PAN number, then what will happen is he has to give a declaration, Form 60. Now, what are all the declarations that have been received is to be uploaded by the person receiving that declaration in 61. So these are all the forms. So a person entering into certain transactions not having a PAN number, that person's information is also being gathered from a third party source. Who is that third party? That person who enters into that transaction himself will give the information. Right. Now, let us go into this statement of financial transactions. Before going into this statement of financial transactions, what we will do is we'll go into AIS, Annual Information Statement. Now, this is one of the welcome move that has been introduced by the Income Tax Department, wherein by the time the SSE is going to furnish his return of income, whatever information this person has entered into those financial transactions that is being reported by the reporting entity gets populated. Previously, there is a 26 EAS also. Now, basically 26 EAS, what type of information is populated in 26 EAS previously? Previously, what are all the tax deductions that have been made in respect of the SSE? Tax collected at so Form 15G, 15H, certain cash, the bank deposits or cash deposits or cash withdrawals, and also certain real estate transactions which have been entered into by this person. Of course, if it exceeds 30 lakhs of rupees, thereafter, you will also get the information if this person has made any non-compliances of this filing of TDS or TCS returns, and late fees or interest or is pending. Those information used to get populated, and also the turnover under the indirect tax law, that is GST, also gets populated. Now, of late, this 26 years has been revamped. Now, 26 years will be having only those information relating to TDS, etc. Now, even the self-assessment tax, advance tax, etc., previously used to get populated in 26 years. Now, what has been done is, now these information has been migrated into annual information statement. Now, the annual information statement of an SSA will have the details of TDS, TCS, specified financial transactions, that is SFT. What are all the taxes that have been paid, demands, refunds, pending proceedings information, completed proceedings information, information received from any other agency, returns of GST filed, what is the GST turnover for this PAN number, where any remittance is made outside India that has been reported in Form 15CC. Now, this authorized dealer who remits for outside India, they have to furnish return. And also in Form number 24Q, for Q4, you will be furnishing an annexure. For the first 3 quarters in 24Q, you will only give the details of the amount of salary that TDS made. But as far as the Q4 is concerned, you have an annexure in Form number 24Q, wherein you will give all the details of that salaried person, including basic DA, etc., etc., etc. What is the HRA, exemption relating to HRA, what are all the exemptions which have been given in respect of that person, all those additional information will be given. Now, that will also be captured by AS. And also in that annexure, what will happen is, if this person is claiming HRA exemption, this salaried class person, if he is getting HRA and he is claiming exemption, this exemption calculation is based upon the amount of rent paid also. Excess rent paid over 10% of salary, that of 40 or 50% of salary, or what you call actual HRA, whichever is less. The exemption calculation, rent also is a component. Now, if the rent paid exceeds a threshold limit, there you have to give the employee has to furnish the PAN number of the landlord. The annexure of 24Q for Q4 will capture the PAN number of the landlord if rent exceeds 10,000 rupees. Now you see the magic. If this landlord he is not offering this amount of rent paid while calculating exemption of HRA in the hands of the salaried employee, that rent paid will be populated in AIS of the landlord as a rent received. So this type of information is being gathered and populated, or the income tax department is in possession of these type of informations relating to persons who have entered into transactions or who have earned income which might be chargeable to tax. Now, interest on income tax refund. As a practitioners, most of us may not be, or may, if not all, at least some may not be concentrating or may not be taking into consideration the interest on income tax refund. The SSC won't be disclosing that fact to the tax practitioner, and the tax practitioner may at most of the times skip this income which is chargeable to tax, that is interest on income tax refund. But this AIS information will definitely capture that. Will definitely capture that, which is to be included as income from other sources. Now, information of form number 61 and 61A. Previously, we have discussed that in respect of a transaction wherein PAN number quoting is mandatory, if the person entering into that transaction does not provide the PAN number, they have to provide form 60. All form 60s should go through this reporting process in 61, and 61A is a statement of financial transactions. Not only that, the registrar and transfer agent or depository should also report the off-market transactions, where the transactions are made through the stock market. Those transactions will be captured elsewhere. But there might be transactions in shares or stocks which are carried out off market. One person has a transfer to other person, but this transaction gets recorded with the depository, because for a demat share where a transfer is to be made, definitely the transaction should get recorded with the depository, because that person only has to transfer from one demat account to another demat account. So there, the off-market transactions are also captured. For transactions which are transacted through stock market, already STT data will be there. The security transaction tax, those people are required to file their returns. From there it will be captured. Now, off-market transaction will also be captured by the reporting made by the depository or share transfer or a registrar or transfer agent. And dividends. Now, previously dividends used to be exempt, but now dividends are chargeable, of course, barring certain threshold limits, etc. Now, how to capture? Now, the person who is declaring the dividend should also report in the statement of financial transaction. Also, mutual funds transactions. Now, any other information. Now, certain transactions here reported from point number H relating to GST returns, foreign remittance, etc., etc., etc. Now, they have to be uploaded within 3 months from the end of the month in which the information is received. So this AIS information is a process which gets updated. This form is a dynamic form. As and when the reporting entity reports that a transactions relating to this person, they get reflected within 3 months from the end of the month in which the information is received. So sometimes it may so happen that the SSC may approach the tax practitioner for requesting him to provide him with the 26AS. In the month of May or June, you may give the 26AS to that person if that person is not able to download it. Right, you are acquainted with downloading this 26AS. Now, by that 26AS has been collected by him for the purpose of finalizing of his books of account. But it may so happen that that person, when he come to you for the purpose of filing of the return, in the month of, let us say, August or September, by that time, certain changes might have occurred in 26AS of that person. So these things have to be taken care. Now, the annual information statement of the SSC contains this much of information relating to him in respect of transactions entered into by him. Now, how does the department able to populate this information of the SSC in his annual information statement? the information is being gathered by the department in one way or other way. Now, what is the way or what is the source of this information for the income tax department? The source of the information as far as certain transactions appearing in the AIS is SFT. That is Statement of Financial Transactions or reportable account, that is filed in form number 61A. All the responsible reporting entities should report through reporting portal introduced or initiated under Project Insight. They have to upload. That uploaded information within 3 months will get and sit in your AIS of your SSC. Now, what are all those SFT transactions? What are all the reporting entities? What are all the reportable transactions? What is the threshold limit crossing upon which this information has to be uploaded? All these things will be through SFT. Now, this SFT has to be filed by specified persons or reportable or reporting entities. What type of transactions these people will upload? Certain transactions get uploaded. High value transactions gets uploaded. What are those high value transactions? What is the threshold? Who is the reportable entity who has to upload? What is the time limit within which it is to be uploaded? What will happen if it is not uploaded? What will happen if not all transactions are uploaded or reported? All these things are dealt with the appropriate provisions of the Income Tax Act and rules made thereunder. Payment of interest is also reported. Payment of dividend is reported. Capital gains from listed securities and units of mutual funds is also reported. Off-market transaction data is being provided by someone. This STT paid data is being provided by someone else. But nonetheless, we should understand that most of the transactions get captured. Now, we'll quickly go through these the basic thing is, I understand that the crux of the matter has been delivered. And as far as these reportable transaction threshold limits and who is the person who has to upload the transaction, we'll quickly go through as the time given to me is running out. Maybe I will take some 5 more minutes and hand over the proceedings to MRG. Now, let us take certain cash transactions. Now we can divide these into certain categories. One of the category is cash transaction. Other category is credit cards. Other category is investments. Other category is currency transactions, and so on and so forth. Interest, dividend, and stock market transactions. Right? So these are, and as far as the cash deposits, cash transactions are concerned, payment for purchase of bank draft, etc. Threshold limit is 10 lakh, and that threshold is to be calculated per year. Who has to report? A bank or a cooperative bank. Now, where can a person buy bank draft or pay order or a banker's check? He can only buy in a bank or a cooperative bank. So, those are the reporting entities, and the threshold is 10 lakh. Purchase of prepaid instruments by RBI, threshold is 10 lakhs, bank or cooperative bank. Current account cash deposit 50 lakhs, bank or cooperative bank. Cash withdrawal. Now, my dear friends, whenever an SSC come to you to furnish his return of income, among other things which you require from him, like LIC receipts, ATD receipts, if he is a salaried employee, Form 16, if he is a person carrying on business books of accounts, etc., you will also require the bank account, what are all the bank accounts he is having, and you will refer to your AIS information also. The banker, if the SSC is maintaining a current account, he has deposited more than 50 lakhs of cash in his current account. He is a businessman. He has GST registration. GST turnover gets recorded in the AIS. The cash deposits in the bank will also get populated in 26 AS or in AIS information. Now, as a tax practitioner, what we will be observing? We may be comparing the turnover in his GST with the turnover in his books of account. Does it commensurate with the amount of deposits of cash made? No, is cash a sin good? Most of us believe that cash is not a sin thing or a sin good. There might be nothing wrong in entering into a transaction of cash transaction. Is there anything wrong? Will somebody be jailed or thrown behind bars if he transacts in cash? No, it may not be the case, because after all, this is a legal tender. This is being issued by the government or Reserve Bank of India. Of course, 1 rupee somebody, other than 1 rupee, somebody will be issuing. Cash is not a sin good. But why the transaction is in cash is being reported? There might be a situation wherein the cash transaction be forming part of unaccounted transaction. If a retail trade person in the market area, everybody come to him, purchases in cash, there is nothing wrong in taking the or accepting the or making the sale for cash. But the thing is that cash which has been collected should be deposited in bank, should commensurate with the sales figure offered by him, with the sales which has been reported in the GST returns. So as a tax practitioner, we may be cross-checking the amount of cash deposit in bank reflected in the AIS with the bank statement. Sometimes the information, there may be duplicacy of information. So you sometimes even there are cases where the wrong the bank account which does not relate to this person get reflected in the AIS of this person. So you can examine such a type, examine whether the amount of deposit made in bank commensurate with the books, bank statement, as well as GST returns that have been filed. So this is very important, my dear friends, as far as this cash transactions are concerned. As a tax practitioner, we have to take into consideration certain safeguards and advise the SSCs accordingly. Of course, cash withdrawals. Nowadays, the central government wants our economy to be a digital economy. The transactions is to be taken place in cash. Cash transactions are discouraged for one reason or other, right? So cash withdrawals is also reported. Now, cash deposited in one or more account other than current and time deposit. For current account, the capturing is different or reporting head is different. For a time deposit, reporting head might be different or source might be different. For a savings account, it will be different. Now, of late in 148 notices, we might have come across certain situations wherein The SSC will be having a current account, a VAT registration, or for that matter, GST registration. He will be carrying out his accounted transactions in this current account, as if the income tax department will not be knowing that he is doing some other deposits in his savings account. He might have deposited in his savings account, the unaccounted transactions are going on there. Now, especially this pre-demonetization periods, whatever notices we are receiving, we are observing this type of transactions wherein the unaccounted turnover may get deposited in the savings bank account, which is not coming within the ambit of taxable income, and the tax practitioner may also not be knowing about this account or transaction. And if this information comes to light at a later point of time, then these 148 notices are also being issued in respect of those deposits made in those accounts. And so on and so forth. Now this point number 6, receipt of cash payment for sale by any person of goods or service of any nature, not being a transaction whose specific reporting is otherwise required. Now here the reporting entity is any person who is liable for tax audit under section 44AB. Now this, of course, we may not be required to report 1 to 5 transactions as a tax practitioner. Only we may have to take into consideration the AIS information which has been uploaded by the bank or cooperative society in respect of our client. But this is a clause where the tax practitioner is also required to examine and report if there are any such type of transactions. And my dear friends, we should also keep in mind that in respect of this point number 6, some of the assessees might get a notice that that person has not filed 61A. 61A is to be filed only when there is any reportable transaction. If there is no reportable transaction, you are not obliged to file 61A, but it is always advisable that in the login of the SSC, in one of the menu, there is a provision to upload the what you call preliminary response to SFT. If you go into that menu, it will ask whether you want to submit a new response. You may click that new response, select the appropriate year. For now, let us say for the year 2022-23 previous year. Now this is the time to furnish the preliminary response of SFT. Who are all your SSCs who are subjected to tax audits for assessment year 23-24? If these reportable transactions are there, you have to furnish 61A. Else, at least we have to submit the preliminary response. If we go there, there will be certain 13 transactions which will be listed. In the drop down, you will be having not applicable or no transactions, or some 3 types of responses are there. For all the other items, you will select not applicable. For this number 6 item, which is there, of course, there the numbering is different. SFT number is different. You have to select and you have to mention whether there are any transactions are there or not. If there are no transactions, you have to select no transactions. If it is not applicable, you may have to select not applicable. If there are transactions, you have to file the SFT. So friends, similarly, credit card information, investment information, as well as this foreign currency transaction information, as well as interest details. Of course, interest also, the details are to be given by banks and NBFCs, right? Dividend details, subject to certain threshold limits, are to be submitted by the reportable entities. Once this is submitted, this data gets populated in the annual information statement of the SSE. Apart from the SFT collection data, the department also has various sources like CIB, etc., wherein the information is gathered. If the SSE has not offered all these income chargeable in respect of these transactions which have been entered into by him in his return of income for the relevant assessment year, then the information gets into possession of the assessing officer. He may believe that the income has escaped assessment, and 148 or proceedings under section 147 will follow. So friends, I thought of just throwing some light on these type of transactions or the sources from where the department is going to get the information for the purpose of 147 or 148. And now my friend CA Amar Prasad will continue with 148, its repercussions, and the sections of 68, 69, as well as these 148, as well as the tax rate which is being applied. So it's what you said, Amar.
Thank you, Netta Ravishwar Garu. Am I visible to you? Yeah. Am I visible? Am I audible?
Yes, sir.
Yes, sir.
I muted.
You have muted.
Yes, you are visible, sir.
Yes, sir. Okay, sir. Thank you. This is all in continuation of what the webinar yesterday by experts. I am a learner, and the material is prepared for the sake of my office students. So other members may please don't think I have given a student material to member, but as a learner, I would like to share the material. And I request Netta Garu to share screen, starting with the 7 materials out of 7 materials. Bankers blunders, sir. Please, bankers.
Sir, yes, sir. I will do that, sir. In the meantime, you may please continue.
Yes.
I will.
Yes.
I will do that.
Yes. Please. Last year, we have a case, and that prompted me to attempt an article. That is bankers blunders resulting in chaos, Telugulo, Englishlo chaos, to ITSCs for no fault of them. So if the assessee is at fault, okay, we can advise him to correct himself and to come forward, declare the income and pay tax and comply with the law. But this is the case where bankers made some mistakes. So the coincidence is the article I sent to Tax Guru and some other tax publisher and I handed over the case to the advocate Manmohan sir through K. Siram Kumar, past chairman. And it was filed on the same day when this is published, 17th May 22. And we got a relief by none other than the Honorable Chief Justice of along with a division bench. It is a division bench. He is joined by another Honorable Justice. Bankers' blunders resulting in flood of IT notices under 148A and under section 148, leaving bruises to ITSCs for no fault of them. Real cases analyzed. This is the largest title I have given among all other articles. Only a couple of articles, not many, but this is one. And it is viewed by 17,000 plus people. I think it served its purpose to some extent. So this is only last year, 22. Almost the same thing happened this year also, even though Act is amended. 22 also, this is 148 and 148. Sorry, clarity.
Screen share చేస్తుంది.
Okay. Ravi sir, screen slide or something like that. I am troubling you. So there are three cases. The first one is show cause notice asking for not filing. Contents of notice, sir, some 66,11,100. Above notice pointed out that in SFT 004, the courts just now we have explained specified financial transactions filed by, I purposefully shielded the bank name and SC's name, but this is the figures and the dates are correct. And SCing officers area also I have not mentioned. SFT 004, that bank reported as if the assessee deposited cash of 66,11,100. Actually, he deposited 11,01,850. But as you said, the duplication of entries by the reporting entities, they multiplied the figure, or maybe Excel sheet, I don't know the much of the nuances of Excel or whatever. 6 times they have repeated the same transaction. So that total to 66,11,100. So initial reply we gave. Officer sent some other letter, or no, this one. Then I requested the bank, Gudwada branch of a private sector bank. Sir, you file a revised SFT correcting the cash credits, because you have now issued the statement of account of the assessee, wherein the deposit, cash deposit is only 11,01,850. So to the SC's rescue, the bank came and they filed revised SFT, which is reflected again in my 26As, in the SC's 26As. So the copy I have taken from the IT portal and attached it to my second reply. So assessee is saved and that is dropped. No further 148 capital A, small d or 148, because there is no need of it. He considered 148A, capital C, acted upon by the department. So I am grateful to the department. Next one, sir, further move this slide. This is all what I have told you. Case 2. Here, this is the case which we went to High Court. This is the main purpose for which I have attempted this article. SSC received a notice under 148 capital A small b dated 20th March 22, saying that they have received information 25 lakhs cash deposit against CIB 410 information code, and 26 lakhs in AIR 001. Again, a duplication. For the benefit of viewers, I have prepared a small thing which I will display to you, sir. You minimize the PowerPoint and show my office so that they can see the Ravi sir. Is in reverse, sir. The letters are showing as reverse, sir.
Mirror images.
Mirror image వస్తుంది. Okay. Sir, any way out to
Maharaj, it is okay, sir.
okay. Date 13. You read, madam.
Date 13th May 2014.
Hmm.
About 2 lakhs deposited 6 lakhs rupees in CIB 410 and in AI 001 6 lakhs. 25/6/2014 deposited 1 lakh. Total amounts to 1 lakh in the same day. On 14/7/2014. 14/7/2014 deposited 3,50,000. On 16/7/2014 deposited 2,50,000. On 21st July 2014 deposited 6 lakhs. On 18th September 2014 deposited 5 lakhs. 12th January 2015 deposited 2 lakhs. Total amounts to 25 lakhs. And below 2 lakhs deposited in a year is 1 lakh. Total 25 lakhs plus 1 lakh, total 26 lakhs. But in CIB 410 reported as 25 lakhs and AR 001 reported 26 lakhs, which is total of rupees 51 lakhs, which is greater than 50 lakhs. So a notice under 148 section has been issued.
Okay, sir. I am withdrawing the board because I am not that much tech savvy like you. So I troubled you, Ravi sir, and other participants. This 25, 26, except that 1 lakh, which is below 2 lakhs on the particular date, 25th June 14. All other information is correct. This 1 lakh appeared in one code and also appeared in AIR 001. So the cash deposits counted as 26 lakhs. CIB 410 captures 2 lakhs and above cash deposits. There is only 25 lakhs. So I tried 2 circles from Word and 1 circle overlapping another like that to show it in a pictorial manner to the assessing officer. Still, he has not heeded. I requested the branch manager to issue a certificate. The certificate is only a summary of what is there in the statements of account. Only one account he is having. And the officer took a stand that he has not, SSA not proved that he has no account with any branch of any bank in India. Has asked for a negative confirmation, which is impossible. Whether the department knows or not, I researched. And as for the Reserve Bank of India second schedule, there are 240 banks, public sector 12, private sector, cooperative banks, etc., licensed by RBI. There are some other banks amounting to 1,500, which are permitted. No license is needed or granted by RBI, but they are legal entities. Their capital is below 5 lakhs, they cannot issue a checkbook like that. So 1,743 banks in India. And PSBs itself, they are having 84,000 branches, 12 PSBs. So altogether, maybe all these 1,700 banks are maybe having 3 lakh branches or what, I don't know. And if the SSAR on his behalf, we attempt How can we know? By Googling the bank HO and getting email still. In a given time, it is a Hercules task or impossible task. Whereas under section 133(6), the JAO has a power to send a notice calling for the information. We requested him, sir, you get that information, make available that statement to us. We will try to reconcile. If not unable, we will offer it as income and pay taxes. He said, no, you are not furnished. This certificate, I cannot verify at this juncture. Then whatever codes information they seek and push on the C, but whatever certificate got from the same bank, they don't want to take it on record at that juncture. That is not of the 30th March, that is in February 22. He has ample time to write under 133(6), exercising his powers. He has chosen not to exercise, and there is no timeout. There is ample more than 31 days time. Still, he proceeded with 148 AD. I said repeatedly, sir, there is a SIF, customer identification file. Every bank allots SIF number to a customer. That he has a savings account, current account, FD account, term loan, deposit loan, water, gold loan, crop loan, everything captured with that common number. Maybe they are aware of it or not. Branch manager categorically mentioned in addition to account number, he mentioned the SIF number of the SC. Still, so it prompted me to go to file a petition under Article 226 of the Constitution of India on 17th May, and we got the relief on 12th September within 4 months. So the second case is a real case for me, and I would like to add for the information of our members, there is, in addition to SIF, there is another code, UCIC. I repeat, Uttar Pradesh U, I Indore, C Chennai, I Indore, UCIC. The unique identification of customer, unique customer identification code. Yeah, unique customer identification code. That is a number allotted to a person, and with that number, government knows, not the IT department, not necessarily IT department, Government of India, particularly Home Ministry also knows. They proposed and RBI issued a circular way back in 2011. All the information of a person or an entity in any of the institutions, 1750 banks or NBFCs or others, to be got in one sheet, in one file. So they have the power and weapons, but they don't use it, and they throw the ball in our court to answer them. So next case, sir. Next page. This is amendment 148. Third one, sir, this case, what you said, the transaction in immovable property. Yeah, just down it, sir. Case 3. Some more down. Page 11, page 10, maybe. Further down, sir, page 9 or so, it started somewhere. 9, no, 8 or so. Case 3, sir, margin heading. Yes, sir. Here the case in a nutshell. There are 2 codes. cash deposits by SSC of 12,64,000 AIR 001. SRO, Sub-Registrar Office, AIR 006, purchase of immovable property 40 lakhs for the financial year 14-15. The SSC purchased a land for a consideration of 3 lakhs per acre, 5 acres, 5 into 3, 15 lakhs she invested. The guideline value of SRO or market value or fair market value, whatever you name it, I have my own words for them. SRO guideline value for the time being, because I am there in the Valuers Institute as well by the IT registered valuer. That is 8 lakhs, 5 into 8, 5 acres into 8, 40 lakhs. They said total 40 lakhs is escaping estimate or whatever. I have to explain. It is there in the annexure, but they have asked me to explain. This 12,64,000 cash deposit has a link with this. Her husband worked in Gujarat or somewhere. Whatever amount of income he has made, he deposited in the joint account held by both of them in our area, in a big bank, public sector bank. She has withdrawn the cash and deposited in her single account. For both the accounts, she has drawing power, check power to draw. Why she has withdrawn, I don't know, but she has withdrawn and put it in her personal individual account. Maybe ready to pay to the vendor of the immovable property. And deposit and withdraw gap, yesterday some Falguni Kumar sir sold for a student case, 1 year lag also, we can explain something. It is only same day, except on one occasion, 1 day delay. On all other days, morning she has withdrawn from one account, deposited in the other account, in her personal account, same day. Still, we have taken statements from the bank, certified by the manager, that ultimately they have considered all the things, and now only 65,000 remains as if unexplained cash rate, though her deposits are more, her withdrawals and deposits are more. By the time of deposit of 15,000, she has 9 lakhs balance cash on hand during the year drawn. And by the time she deposited 50,000, she has 11 lakhs cash on hand for that year, not earlier year's cash, not accumulated income, nothing. Still, only 11,99,000 they have omitted, and 65,000 they have proceeded to add as if income from other sources, as if unexplained. Keeping it aside, for 40 lakhs, I requested the officer, the valuation is so low, so high. Why? Because that land has no access by road. They have to cross a riverlet, even manpower, labor, and seeds like the inputs. And after thrashing, taking out the produce, they have to cross a riverlet manually. No machine, tractor can go there. So that was only 2,32,000 originally they purchased. There is an agreement to that effect, but the payment is not made, token advance not made by through bank payment, but there is executed on a 100 rupees non-judicial stamp paper. Her husband came for registration, and after some 2 weeks, he got a call from Gujarat. He has to report there within 3 days. Then he asked the vendor, sir, I will pay the balance and please do complete registration. The vendor seizes that opportunity and he demanded 3 lakhs instead of, though he agreed for 2,32,000 on a written agreement witnessed by 2 people, one employee of that area also. So that goes to show that its worth is 2,32,000. Not only he, there are other buyers from the same vendor and other vendors and other buyers in the same 3 to 4 months transaction. So I requested the officer, sir, this is the stamp paper and we paid 3 lakhs. Please refer it to Departmental Valuation Officer, DVO. And I quoted another real practical case where the department purchased a premises site for 1,000 rupees per square yard, whereas the SRO guideline value is 625 rupees. No, I told you the other way. They purchased for 625 rupees. They paid consideration of 625 per square yard. SRO guideline value is 1,000. I gave the survey number and the name of the town where the department purchased for its office purpose and staff quarters purpose. And I said, please inquire get a copy of the document. SRO says guideline value. Across one road, Vijayawada, Elur Road or Vijayawada Road, that end to this end may not be the same rate. Near Kabela, slaughterhouse, it may be very, very low. Nearby a theatre, it will be low because of nuisance value. Nearby educational institution may be a better value, a commercial complex it may be a better value. The place purpose also factors in deciding a value. So a DVO can do some justice for it. I requested repeatedly, without referring to DVO, adding this 40 lakhs, she paid 15 lakhs plus stamp duty out of withdrawals from the second single account. Still, they proceeded with 148 AD. Only concession given out of 12,64,000, 11,99,000 they have withdrawn, 65,000. Original proceedings, 40 plus 12, 52, that is above 50 lakhs. Now they say it is 55,000 plus 25 lakhs. And some 16,32,000, 148 read with 147 assessment completed. Prior to that, I made 3 petitions under section 154, April 22. They have kept quiet for 12 months, April 10 months, up to February 23, without any communication. Suddenly they got up. In March 23, they issued the order, final order. So I asked my seniors, one person, to file an appeal before the CIT appeal and simultaneously file a petition in High Court to give a direction to the JAO to dispose the 154 petition. In the statements, not statement, in words, CBDT, that instruction, the instruction, they said 154 petition has to be disposed within 6 months. Citizens Charter, 2 months. And somewhere they said it is 4 months. But he is keeping quiet for 10 months, not disposing. We have to file within 4 years, 154. But how long an officer can take the time? I don't know. It is nowhere specified except the Citizen Charter and CBDT instruction. But they are not sticking to it. And for the second petition, the officer gave a one-line answer by email. Already 147 proceedings are on, hence I cannot take up 154. That is no ground. There is a case law. Had he disposed my first 154 petition, there could not have been any occasion to issue a 148 AD and 148 and starting 147. So immediately I added some Rajasthan tribunal decision, filed a third petition under 154, which was not at all acknowledged. So these three cases, this article discusses, sir. Let us close this article. And I will come to present 148A, that is after amendment. Ravi sir, let us close this article. And let us start with the part 1 of section 148A paper for deliberation, discussion and decision making only, part 1. Please. Kishore sir.
Yes, sir, I am in. Just I am browsing through that article.
Okay.
Give me a second. Can you repeat the name of the file which you are referring to?
All files are
148 one paper.
Part 1.
Here it is.
148 is starting, last word is part 1. 148A paper for deliberation, discussion and decision making only, part 1.
Just a minute, sir.
That will be followed by part 2, part 3, part 4, like that.
Right.
Meanwhile, I request my professional colleagues to take the Income Tax Act into your hands and open, see the section 148A. ఇది కొత్తదా? Paper I am referring. Ravi sir, this is the paper I am referring.
Okay, sir.
First lines you ignore because it is prepared for my PU students and to be published. Originally, this particular paper I sent to our ICA website. That is not website, WhatsApp group. Other 3 not shared to anybody. Points to point over, section 148 capital A. Sir, the second word, conducting inquiry, inquiry, INQUIRY. Providing opportunity before issue of notice under section 148. And it reads down, that is the marginal heading, where the word inquiry is worded, used, inquiry is used, INQ. The section reads, assessing officer shall, before issuing any notice under 148, conduct any inquiry. So that started with INQI, marginal heading, and it is ENQI. If required with the prior approval of specified authority with respect to information which suggests that income chargeable to tax has escaped assessment. The word inquiry has not been defined neither in the IT Act nor the General Clause Act 1897 and not found even in Civil Procedure Code. So I searched in Criminal Procedure Code, another central act. You said, you mentioned Criminal Investigation Department is also there. In addition to CIB, in Vijayawada office also we have a ITO, C&I, Criminal Investigation. That is why I have gone to, because it is not there in the Civil Procedure Code, I have gone to Criminal Procedure Code 1973, updated up to 24th June. This article as attachment is written by one Sharma, Sri Sharma, BLLB pursuing. There, bottom line, sir, beneath that, Ramnath Iyer Concise Law Dictionary. You bring it up, sir. And the page, if the can be font can be increased, you can increase, sir. So, sir, first page itself. Sir, first page itself. This as per Ramnath Iyer. That page, if you can, yes, sir. Thank you, sir. As per P. Ramnath Iyer, Concise Law Dictionary, former Advocate General, Maharashtra. without prejudice is without adversely affecting an action taken. Okay. No, sir. That let us skip it, sir. Next page. Let's go to page 2. This is where I attempted without prejudice. Page 2, sir. Inquiry under the Criminal Procedure Code. Table of contents, object of inquiry, inquiry, types of inquiry. Here I'll add something, sir. Let us stop where first page we have. First page you see, sir, this in this attachment. Difference between inquiry and investigation. Above landmark judgments. Just one line down, sir. One line down. Landmark judgments is on the top, sir. Just bring down the paper by one line. Yes, sir. Landmark judgments and types of inquiry. Judicial inquiry, non-judicial inquiry, preliminary inquiry, local inquiry, inquiry into offense, inquiry into matter other than offense. Differences between inquiry and investigation, landmark judgments. Conclusion. So, let us go to page 2 and subheading inquiry. Page 2, subheading inquiry. Yes, sir. Yes, sir. Yes, sir. We can observe that often people get perplexed regarding the use of inquiry and inquiry. This the person author has one kind, which I will clear, not me, the author. And this article. Inquiry means to ask a question. For a common man, RTC bus go, we go, sir, where Hyderabad bus comes. That is an inquiry. We will ask a question. The counter person may respond. Go to platform 32. Inquiry, IN, is a formal investigation. Inquiry, though, follows under the same page but has a level of difference in them. As discussed, inquiry is the process of seeking information from a person who might have some relevant information about the matter in question. So, inquiry is defined under section also CCP, CRPC. So, let us skip this page, sir. Let us go to page 5 or so, where the subheading is types of inquiry, and above that power to hold investigation is there. Types of inquiry, sir. There are 6 kinds of inquiry, which is there in the first page itself. Next page, sir. Judicial inquiry, non-judicial, preliminary, local inquiry, inquiry into offense. Here, against non-judicial inquiry, I would like to add disciplinary action, non-judicial inquiry, sir. Just disciplinary action against a employee of a company or a department. Administrative inquiry, which means that any inquiry which is not for the purpose of the enforcement of the law. Maybe that's what I understood. Next, inquiry into offense can never end up in conviction or acquittal. Inquiry into offense can never end up in conviction or acquittal. General inquiries into matter other than offense offense, which is based on matters other than the offense. This includes general inquiries made or any other inquiry which excludes the particular offense. Differences between inquiry and investigation, only for the benefit of audience, I have continued. Next page, sir. Now, we are examining inquiry and inquiry, but this is inquiry and investigation. Landmark judgments. Let us close this attachment, sir. This is over. Last conclusion page, sir. Last but one page. Conclusion. In this page, we have covered the stages of inquiry as well, where inquiry is defined legally and what does it mean. Inquiry gives us an understanding of the nature of the crime, if it is a crime in our tax these cases. Nature of the crime tells, okay. third, fourth line, the nature of the crime tells 3, 4. Fifth line, inquiry usually occurs after the investigation stage, and which also directs whether the evidence which is collected by the police are actually true or not, and whether they form. Usually people get confused between inquiry and investigation. And last sentence of the conclusion paragraph, the inquiry can be both judicial, non-judicial, etc. Inquiry has to undergo a proper procedure. Let us close this attachment, sir, and go to section 148A, part 2.
Just a minute, sir. I will do that.
Yes, yes, sir. Why I have cut into 4 parts is to upload to tax publishers, particularly Tax Guru wants the article not to exceed 3,000 words. So that is why I made them like that. And in the meanwhile, I would join to avoid all this trouble to you and others. Because first quarter page and last quarter page are something same things. Real is first page 3/4 only. First top 1/4 quarter is not required. Here points to ponder over. Yes, sir. Points to ponder over. Let us start with the points to ponder over 2. Again, inquiry in the bracket after clause subclause A, not defined. So this all we have covered. Last line, last bracket, sir. The difference inquiry can be understood with the help of the provisions presupposes, this is my point, sir. The provisions of 148 capital A subclause A presupposes conduct any inquiry if required with the highest authority or whatever specified authority. I do not know why the draftsmen have picked inquiry and why not a comprehensive, thorough, full and final inquiry. Why they picked inquiry? Why not inquiry? If inquiry is picked up, they might have to spend some more time, but it will be acceptable. It shall be acceptable to the court as a refutable evidence as per Indian Evidence Act, in my humble opinion. So for these clarification of this inquiry and other, I always consult 5-6 of advocates, chartered accountants, luminaries, and a poser to senior advocates, senior CS, and the correspondence between me and them is attached. I have hidden the names. So next page, sir. Next page, sir. Page
Yes.
3. This is what I sent to them. Good morning, sir. This was sent at about 2:30 morning AM. Just down, sir. That is my query. If you see my query, then only page 2, sir. We are in page 4. Page 2, sir. Page 2, sir. It is in 3. This is good morning, sir. Though it is a good evening now. Estimate 2 time deposits aggregating to 9 lakhs. 3 lakhs 1 deposit, 6 lakhs 1 deposit, not cash deposits. With a PSB branch during 2015-16 financial year. From his SB account, out of accumulated agricultural income received for sale of paddy from own agricultural lands to AP State Civil Supplies Corporation. So the sale consideration is also received from AP State Civil Supplies Corporation. IT department received, Department received SFTIR CIB as per annexure to notice by DIN so and so. PSB gave information to the IT department as if he made 14 time deposits, numbering 14 time deposits, though he made only 2 time deposits. And aggregate he made is 3 plus 6, 9. They have received the information that he made 63 lakhs. which is not true. I asked the SC to meet the BM. Routine, he obtained the statements from the branch. Branch manager issued the same. Next, 1, 2, 3, fourth para, I asked the SC to enable me to talk to the BM of PSB as I talked to other BMs earlier in other cases. To request for a certificate. Certificate is nothing but a summary of the statement of account. As per the SPTD statements, customer their 2 TDs and need the same so as to submit as an attachment the reply to IT notice. Here, please underline my point, sir. Fourth para, BM vehemently declined even to take his phone to talk to me. So I don't want to go into that. I kept quiet. Fifth para, due date 15th. On 14th, I submitted reply by SC to ITD by covering letter with the facts and attached the statements obtained and requested for opportunity of being heard. Next to last para, sir, last but 1 para, 1, 2, 3, 4, 5, 6th para, sir. I need your expert opinion guidance whether I can request the AO to summon the BM of the PSB to come prepared with the documents explaining and reconciling the number and the value of time deposits reported to ITD by SFT and as per SBTD statement issued by the branch, and enable me to cross-examine the bank manager. Then please provide me legal power under civil law, common equity and relevant provisions of the respective action or case laws. Please throw light on whether I can seek to make available me the results of inquiry, which he has not communicated. He sent simply jurisdictional AO that he has written a letter to the branch. Okay, what the branch gave a reply to him, he has not shared to us. We asked for that. Why am of the AO might not have conducted inquiry? Yes, just he mechanically sent a letter to the bank, and what the bank sent to the in February itself to the ITD department, not shared to us. BM informed that BM also informed to the assessee that he has received a notice under 148 capital A subclause A, and he replied. But what reply? Maybe he cannot disclose to us. Accordingly, has not disclosed, not revealed the contents. Next page, sir. There is, sir. Between PSB, the alternative defense against notice is to file a writ petition before the jurisdictional high court of AP at Amaravati. Same what I have done earlier. First response came to me by Pfizer. A reply of a senior CA from Hyderabad. It is a 2-line or 1 line where he opined, you can very much ask the ITO to summon the bank manager, but at this stage he may not summon. Based on your reply with evidences, the ITO may process further. That is the first reply, sir. Next, another CA, senior CA, he stated some 68,000 cases are identified by the department, received from reporting entities, and then proceeded to state that avoid, 4th line, to avoid issue of 148 notice leading to reopening assessment, ITD has initiated a e-verification scheme. But whether it is carried out or being carried out, I don't know. Please review your AS and see whether any such information is in your account. If the information shared is incorrect, you may reply to the same, clarifying and giving your explanation objections. In case you find that on the basis of information shared by AAS by ITD, any income has not been included in ITR and hence escaped assessment, still you have an option to file an updated return of assessment year 2021. by 31st March 23 by paying tax interest extra 50% additional tax. Accordingly, advisable to check your AAS. Of course, luckily what you told, 2 years back only AAS came, say November 21 or so. Yesterday, our Falguna sir also told that better to file to avoid even pay all additional tax, but save penalties. Here he is having no other income, sir, other than agriculture income, and on the deposits he got some interest and some TDS is also made, but that is hardly 5-digit figure, not even 2.5 lakhs. So I proceeded to file. Prevention is always better than cure is the advice from the senior CA. Another senior CA, dear sir, issue a legal notice to the banker, marking to ITO, wherein you state that it is in between them to settle the wrong issue. Loss that is going to be incurred shall be borne by them jointly and severally, as SC is not at fault. On these lines only, I sent a registered notice to Gudivada Bank of a private sector bank that your bank has to bear the tax demand, ultimately passed by 147 order. Then they came and fall in line. Received from another senior CA, SC is entitled to second para and the last pair of this page for issuing, know the reasons for issuing notice, but except for stating in the annex information codes AR, CIB, they are not giving any other information, what they received from the manager or whatever. Next page, after filing the response to SC may receive a 148 notice. Mere AN information, this is important. Mere AIR information does not constitute evidence. It is information to AO to start inquiry and gather evidence. Information contained in AIR needs to be proved with evidence by AO. Maybe this is the legal status, but from the information technology or information security domain, I state there is flood of data. Processed data is information. So any data they receive, anybody receives, even a businessman, it has to be verified, cross-verified, retotaled, rechecked. Then only it will be an information. Simply AIR code information, code figures are not information. They can be a data. The SC can seek issue of summons to the branch manager. This CA also confirmed, and cross-examine the branch manager either under proceedings under any point of time, either under 148 capital A or proceedings under 148. SC may also file an affidavit. SC should demand for evidence of deposit of 63 lakhs in order to enable him to submit. The following case law may help. Rajesh Chunara versus the ITO Ward 21 Jaipur, ITA number S2089. A retired banker, I consulted not only CS advocates, a retired banker. He said, you advise your SC to claim the difference. 63, they reported. You made only 9. 56 lakhs you ask the bank, claim the bank from the bank, and pay whatever tax out of 56 lakhs. Balance you make a profit. You can pocket it. That is a reply by a retired banker. Next, let us go to section 148A, part 3, sir. Where is that? Next, let us go to next
Yes,
papers.
Yes, sir. Give me a second. I will.
Yes, sir. In the meanwhile, for the information of our professional colleagues, I served as a professional director appointed by Reserve Bank of India for a local area bank. At that time, 2005, it has more than 50 branches in 3 revenue districts. I served a maximum 1 year. Later, I was co-opted as professional director in the Urban Bank, which was read out by our Jayant, our treasurer. There I served from April 2014 to November 18. I always advised the banks where I worked as a director or a statute director or a concurrent director or whatever, where I am a customer, to comply with IT law on a top priority in the meetings to managers on TDS or TCS and comply with all laws. And now I have an occasion to share with all of you. Leaving IT compliance, Institute has made it mandatory from 1st October 22. They have mentioned NOCLAR. I repeat, NOCLAR. LAR. Non-compliance of laws and regulations. You separately check in the Code of Ethics. In the company audits, we give CARO, where we state what are all the statutory dues, undisputed, but not paid within 6 months, disputed where the case lies, like that. In addition to that, this NOCLAR, this need not necessarily be for companies. This is institute that is under MCA. Every now and then common man makes mistakes, not necessarily an SC. A plot of 200 square yards, you have to leave all sites as for municipal or other regulatory authorities. When construction area comes to hardly 100 square yards in a small piece. So if you cross that limit, there is a non-compliance of municipal law. Like that, there may be a plethora of violations, non-compliances. So we have to report them that NOCLAR by ICA came into existence, effectiveness from 1st October 22. So whatever all reports we issue after 1st April 23, even after 1st October 22, suppose a company closes its books of account by a calendar year, then it has started. Most of the companies or others follow financial year. So from 1st April 23, in addition to audit trail in a case of companies. So let us not deviate from the IT, particularly section 148 capital A. Inquiry, these areas, let us skip the first page, sir. This is running in 15 pages with an attachment, sir. Let us go to second page, sir. Second page, this para is relevant, sir, what that is in bracket for understanding provisions of 147 dealing with income escaping assessment as per section 2, subsection 8. Assessment includes reassessment. Explanation 2 of section 147 in a situation where no return is filed by assessing and income exceeds the maximum amount not chargeable to tax, then the same is deemed to escape assessment. Reading and understanding of significant issues as decided by different high courts help to comprehend what, where, when is income escaping assessment. I have listed out all the case laws 1 to 7 in this page. Please turn over, sir. Next page, sir, page 3. Page 3, that is last case law. Mahesh Kumar Gupta versus CIT. In absence of reasons recorded to say that income that escaped assessment of 1 lakh or more, reassessment notice given after 4 years from the end of assessment, because it is 2013 decision, pre-amended 148 provisions. For further discussion, let us go to part 4, sir. This is the case what I have filed with the help of Dr. Manmohan, sir, our SSC. Praveen Kumar, sir. And Ravi sir, you are a technical person, technology. Our some officer in the department, my good friend, asked me, sir, this order you got and we have to withdraw 148 after issue of 148. What? How come we can withdraw? Even the High Court questioned, okay, how to do it in the system? I said, I cannot throw any light because I'm poor in IT knowledge. Though I did so many diplomas or certificates, only Infosys can do, but they will charge. This is paper 4, the last paper on 148A, and we'll go back to other sections after this one. Again, inquiry I started. Income escape, assessment and reassessment, section 147 to 151 and 153 to 153C. Yesterday, the gentleman covered. New procedure, a completely new procedure of assessment has been incorporated by Finance Act 21 in aforesaid cases with effect from 1st April 21. The salient features of new procedure are given below. This our members can see it. And under the line, income escaping assessment, issue of notice where income has escaped assessment. Assessing officer shall before issuing any notice conduct inquiry. Sir, A, inquiry, we have thoroughly discussed it. B, provide opportunity of being heard to SC. I requested in at least 3 cases and not even one case they have given the opportunity of being heard. And again, what is the remedy? Every time I cannot run to a high court. It is costly, which suggests that income chargeable to tax has escaped assessment and he has to communicate the results of inquiry conducted. This also I mentioned earlier. They are not communicating, just they are sharing the codes, information, figures in the annexer, or sometimes they are raising questions in the annexer. Then consider the reply as per subclause subsection C by the SSC, reply of the SSC furnished, if any, in response to notice. So I furnished a certificate from the bank manager and the officer is escaping, saying that this cannot be verified at this juncture. Juncture, that word vocabulary I learned on that day only. When he will verify? After passing an order, demanding so much. If they have time to push notices and they don't want to verify what we have obtained from a PSB branch manager, not a confirmation letter from my brother. What can I do? Next C, next D, decide on the basis of material available on record, including reply of the SC. Again, reply of SC is again repeated in C as well in D. Whether or not it is a fit case to issue a notice under 148 by passing so and so. Information which suggests that the income chargeable to tax has escaped assessment means what is the explanation? Sir, here 1 second. I am, at least from compared to last year, I am promoted from LKG to UKG, whereby at least 50% of the cases I got an order that it is not a fit case to issue a notice under 148. To that extent, I served my SCs to the best of my ability. Remaining cases, 2 cases are going for a writ. 3 cases were filing return or appealing to the CIT appeals. Next, skip sir, page 3. Let us go to page 3. Page 3, sir. Ravi sir, page 3. Conducting, sir, page 3, sir. We are going for some more. Just conducting the inquiry, providing opportunity before issue of notice and 148. Bold items, assessing officers shall conduct inquiries. Results of inquiry conducted communicate not less than 7 days. Such time cannot be less than 7 days. Here I want to add, sir. Originally notice received SMS and email by the legal heir of the deceased SC, sir. He met with an accident and died. And here I would like to add, sir, all the members, sirs, so long he was alive, we used to give his mail ID and his phone number, mobile number to the department in her case also. His case and wife case. Children were minor at that time. Some 7 years back, he was died in a road measure. So 6th March, I received, of course, my email ID is also there. So I received it about 1:40 p.m. in the afternoon. I saw it after my lunch, 2 p.m. plus. Immediately, I called her. Madam, whether you have received this SMS? I received it in my email. And check your mail. After 3 p.m., I'll go to office and see that whether it is there in my mail as well. It is there in my email. I will see in the e-proceedings. She said, okay, and I asked her to come down to office by 3:30 p.m. She came and I asked her to bring that death certificate, etc. She brought that, and in the reply, I attached the death certificate. The notice is issued in the name of the person, male, with his PAN number. This also underlined, sir. But received by her, by SMS to her personal mobile number, by mail to her personal email ID, which were never, I don't know. How come the department know? So I inquired my friends in the banks. They said, as part of 148 capital A sub A, they visited the bank and obtained the account as a legal head. What is the account of the mail transferred to her, and latest Aadhaar, KYC, etc., including phone number, mobile, email ID of her. That information they share to the department because it is there on the record. They cannot deny it. I got another news. It's a news to me. So I gave a second reply on 13th. Sir, I am gathering information because I don't know where he kept his accounts. Bank names she knows. What are all the accounts in the banks? I'll go to the banks and collect the statements of account and we'll come back. That reply I gave on 13th. They kept quiet, sir, up to 29th, 16 days. 29th evening, 6:29, a notice digitally signed. 6:39 pushed into my email ID as well, her mail ID. We usually close our office by 6:30 p.m. But at 6:45 p.m., I saw in my smartphone there is a mail. So I asked one staff member to stay back, and we gave a reply. There the time given is 30th morning, 11 a.m. We have to give so much information. Evening 6:39, it is in our email, but not in e-proceedings. Ravi sir, you will appreciate. Email has a date and time stamp. E-proceedings do not have that stamp. When they push into e-proceedings, I don't know. Not up to 7:15 p.m. But I asked for again opportunity of being heard in this case also. Morning by 9, we open 9:30. By 10:15, 10:20, I sent email, and before that I checked in e-proceeding that was there, the same notice. Okay, sometime after 7:15 p.m. and they have given me 16 and half an hour, 16 hours and half an hour. Kept quiet from 13th March to 29th March evening. Natural equity or natural justice, I don't know. And out of 16 hours, sir, it is not daytime. Evening 6:39 to morning 6, it is night. It's a private time of a personal life. A widow, she has to send her children to school or whatever exams are going on. And she has to come. If she comes by 7 a.m., I will not open my office up to 9:30. How can I submit information by 11 a.m., sir? When the Act specifies in subclass B, 148 capital A subclass B, minimum time period, such time cannot be less than 7 days. How can we equate 16 and hours with less than 7 days, sir? But not less than 30 days. Minimum 7 days, maximum 30 days. But on application, it can be extended for a reasonable cause if it is shown. This is where we thought that there is a gross injustice. Again, this case is going for a writ petition. Material on the record. In the second case, the beauty is his name and his PAN number, but only addition is legal heir, wife, so and so, Mrs. X. But as per the procedure, they have to identify the legal heirs. We submitted the same on 13th March itself. We are not hiding anything, sir. Wife, mother, children, too. We have given their names and all of them are having PAN numbers, and we have given the PAN numbers also to cooperate with the department. They have to issue notices to legal heirs before 31st March. And from 13th March, they kept quiet. 29th evening only, they got up, wake up. So the only remedy is to knock the doors of High Court. Next page, sir. Sanction for issue of notice, who has to give, we all know. Other points, I don't want to throw much light. And time limit for issue of notice for reassessment under 148, time limit for notice, we all know. Because I am rushing or not. End of this page, part 4, sir. I mentioned 115 BB, maybe page 5 or so. Case laws I have. This where I want to stop, sir. 115 BB, you know, and all of us know, it is 60%. So I test my students, what is the maximum marginal rate? Usually everybody will tell 30. Under this, if the income fits as other income, then we will examine. Tax rate 60, surcharge 25% of 60, that is 15%, 75. Penalty 66%, 60 plus 15 plus 6, 71, and cess 4% on tax. So 83.25, interest 234 ABC, penal and prosecution provisions. This I want to go to that another papers are where IT department site I have downloaded something which I mentioned as that is taken from IT department, sir, site. Cash credits, that provisions regarding rectification, not that one. A tax treatment of cash credits, sir. That title you see, sir, that is the last one. Ravi, sir, tax treatment of cash credits. Tax treatment, tax rate, sir. Any sum found credited in the books of the taxpayer for which he offers no explanation about the nature and source thereof, or the tax authorities are not satisfied by the explanation offered by the taxpayer, is termed as cash credit. So this is the definition. In this part, you can gain knowledge about various provisions relating to tax treatment of cash credit. Basic provisions. The provisions relating to tax treatment of cash credit are given in section 68. As per section 68, any sum found credited in the books of a taxpayer for which he offers no explanation about the nature and source thereof, or the explanation offered by him is not, in the opinion of the AO, satisfactory, may be charged to income tax as the income of the taxpayer of that year. In case of a taxpayer being a closely held company, share application money, share capital, share premium, like that. Next, sir, move on to above discussed provisions shall not apply. Last one, sir, sir, page 1, just last 2 paras, 1023 FB, that is half, it is shown just 1 line below, sir, 1 to 3 lines below. That is, sir. The above discussed provisions shall not apply if the person in whose name such sum is recorded is a venture capital fund, like that. For them, there is an exemption. Above that, subclass B, such explanation in the opinion of the AO aforesaid has been found to be satisfactory. That relief came from applicable from assessment year 23-24. That is what I wanted to draw your attention. Conditions to be satisfied for applicability of 68. Maintained books, let us turn over, sir. This is all as amended by Finance Act 22. Next page, sir, page 2. Other provisions to be kept in mind. Let us stay here, sir, for some time. Apart from the provisions relating to taxing of cash credit given under section 68, similar provisions are designed under section 69, 69A, 69B, 69C, and 69D. In respect of certain other items, the provisions in this regard are as follows. Sir, I will read out with rather permit our office CA finance student to read out. 69 unexplained heading to sir.
Section 69 unexplained investment, where in a year the taxpayer has made investments which are not recorded in the books of account, if any, maintained by him or in any source of income, and he offers no explanation about the nature and source of the investment, or the explanation offered by him is not, in the opinion of assessing officer, satisfactory, then the value of the investments may be deemed to be the income of the taxpayer of such year.
Instead of then, it might be then. Okay, that is a typographical mistake, not a much point. Unexplained investments, all of us know, sir. But when it is an assessment under 147, with coupled with 143 subsection 3, or sometimes if no return filed or no information or information not adequate information given, then it may be read with 144. In those cases, that 60% plus 83.25, this unexplained investment is also a big burden. Next, 69A. Sir, let's push it, the paper some more up. Okay, 69A.
Section 69A, unexplained money, where in any year the taxpayer is found to be the owner of any money, bullion, jewelry, or other valuable article, and such money bullion, jewelry, or valuable article is not recorded in the books of account, if any maintained by him for any source of income, and the taxpayer offers no explanation about the nature and source of the acquisition of the money, bullion, jewelry, or other valuable article, or the explanation offered by him is not, in the opinion of assessing officer, satisfactory, then the money and the value of the bullion, jewelry, or other valuable article may be deemed to be the income of the taxpayer for such year.
Okay, stop there. Sir, I want to add. Then okay. Deeming. I presented a paper long time back in Vijayawada branch on the deeming provisions. What are all the deeming provisions in Income Tax Act? For ACS and students, I asked them with the help of a e-book, they can search for where the deemed income comes, how many times, in how many sections. So it is like Maya Sabha. Though it is not income, it is deemed as income. As you said in the earlier case, Sir Ravi sir, transfer of property, if it is below guideline value, both buyer and vendor and vendee, both are suffered with the dose of tax. That is single transaction, 2% tax. But that raised by the press correspondent to the then finance minister, he said it is justified. Okay. One transactions on the same difference, 2%. Vendor paying capital gains tax, whether it is short term or long term. Buyer, that is lower tax. Buyer has to pay the highest tax. So the 20% or 30%, let us assume 50% of the difference involved goes to government. So one has to be very careful, and usually our assessees on file, regular filers also, they do so many mistakes, errors, not frauds. They don't consult the tax professional. They go to a lawyer before buying a property. They go to a document writer. They go to an engineer to measure the site or building. But they don't consult the item, except if they need a bank loan for a building to purchase, construct. Similarly, when they are selling, they don't come or inform the tax professional. Some document writer will will advise them, and nothing will happen, sir. And some smart document writers write on the first page itself, 1 crore worth of property purchased for 60 lakhs. Of course, even if it is not written on the first page, somehow SFT or otherwise AIR or CIB information will capture on the last page, Rule 3 statement, schedule. They will give what is the guideline value, and stamp duty has to be paid on the guideline value, whatever be the consideration, less consideration, low consideration, or a nil consideration to a non-relative, relative as defined under section 56 to 7 or 8. So here, gold jewelry, many of us know how much gold jewelry one family can have. For the sake of students, even if they are not there, for the junior members, 1-2 years of practice, there is a board circular that married women can have this much, unmarried girl, the daughter of the family, married family head male, like that, 950 grams is permitted, old sector 68 or somewhere. So up to 1 kg one can hold. For that, no bills need to be submitted. Other than more than that means we have to submit the bills or the accounts from which the amount is arranged. I have to satisfy the officer. So next 69 years, sir, you have the pay. Complete in unexplained money. Okay. 69B started in this page and okay. Started in the above page. Okay, read, madam.
Section 69B, where in any year the taxpayer has made investments or is found to be the owner of any bullion, jewelry, or other valuable articles, and the assessing officer finds that the amount expended on making such investments or in acquiring such bullion, jewelry, or other valuable article exceeds the amount recorded in this behalf in the books of accounts maintained by the taxpayer for any source of income, and the taxpayer offers no explanation about such excess amount, or the explanation offered by him is not, in the opinion of the assessing officer, satisfactory, then the excess amount may be deemed to be the income of the taxpayer for such year.
Almost is like 69A and 69B. Okay, next let us go to 69C, sir. Unexplained expenditure. Read out.
Section 69C, unexplained expenditure, where in any year the taxpayer has incurred any expenditure and he offers no explanation about the source of such expenditure or part thereof, or the explanation, if any, offered by him is not, in the opinion of the assessing officer, satisfactory, then the amount covered by such expenditure or part thereof, as the case may be deemed to be the income of the taxpayer for such year. Aforesaid unexplained expenditure, which is deemed to be the income of the taxpayer by virtue of section 69C, shall not be allowed as a deduction under any head of income.
This second para, first para, okay. They are taking care. If some expenditures are identified as unexplained expenditure, if one is smart to make a claim under any other head, that is barred. Okay. Next, 69D. Yeah?
Section 69D, amount borrowed or repaid on hundi, where any amount is borrowed on a hundi from, or any amount due thereon is repaid to any person otherwise than through an account pay check drawn on the bank, the amount so borrowed or repaid shall be deemed to be the income of the person borrowing or repaying the such amount. It will be treated as income for the year in which it was borrowed or repaid, as the case may be. However, it should be noted that if any amount borrowed on a hundi has been treated as income of any person by virtue of section 69D, then such person shall not be liable to be assessed again in respect of the same amount or repayment thereof. Amount repaid shall include the amount of interest paid on the amount borrowed.
Okay, madam. Out of the three paras subdivided, this 69D, middle one is a relief to us. It should be noted that if any amount borrowed on a hundi has been treated as income of any person by virtue of section 69D, then such person shall not be liable to be assessed again in respect of the same amount on repayment. Great relief, because 269 SS and 269T. This is hundi transaction, that is a cash transaction. If amount borrowed in cash or otherwise than by through banking channels, cash is implied other than through banking channels. 20,000 or more. Okay. One day I borrowed some 20,000 as a hand loan from my own brother. Within a week, I got adjustments, amount, fees collected, something. I repaid to my brother 20,000. There, both the sections have implications and invoke penalty provisions. Here, at least once it is treated as income, repayment does not attract. Okay, that is a relief. Amount repaid shall include borrow interest, including interest also no issue. Then the tax rates applicable. Read, madam.
Tax rates applicable to amount charged to tax by virtue of section 68, 69, 69A, 69B, 69C, and 69D. As per section 115 BBE, income tax shall be calculated at 60%, where the total income of SSC includes following income. Income referred to in section 68, section 69, section 69A, section 69B, 69C, or 69D, and reflected in the return of income furnished under section 139, or where which is determined by the assessing officer and includes any income referred to in section 68, 69, 69A, 69B, 69C, or section 69D, if such income is not covered under clause A. Such tax rate of 60% will be further increased by 25% cess, 25% surcharge, 6% penalty. That is, the final tax rate comes out to be 83.25%, including cess, provided that such 6% penalty shall not be levied when the income under section 68, 69, etc. has been included in return of income and tax has been paid on or before the end of the relevant previous year. No deduction in respect of any expenditure or allowance for set off of any loss shall be allowed to the SSC in computing the income referred to in the clause A of subsection 1 of section 115 BBE.
Yes, madam. Third para, sir, after clause A, B, such tax rate of, such tax rate of 60-25, we arrived 83.2, provided that such 6% penalty shall not be levied. Okay. When income under 68, 69, etc. has been included in return of income and tax paid on or before end of the relevant previous year. Okay. No deduction, that is a relief. Last para is not. No deduction in respect of any expenditure or allowance, bracket, or set off of any loss shall be allowed. No expenditure, no allowance, no set off of loss allowed to assessee in computing his income referred to in clause A of subsection 1 of section 115 BBE. I think this is the last. Okay, there is another fourth page. This one. What is fifth page, sir? MCQ and tax treatment of cash credits.
Yes, sir. Those are only MCQ, sir.
Okay, that we can skip, sir, and our time, I think, is
Yes, sir. Yes, sir.
7:45, and you decide, sir, what to do. Any?
In a chat box, maybe we are having one or two queries.
Yes, sir.
Go through that.
Okay.
One of my client has done fixed deposit of 15 lakh rupees in cooperative bank.
Okay.
The transaction got reflected and such fixed deposit were withdrawn in the next financial year. And even such a withdrawal he got reflected in the SFT. My question is, is there a probability of getting section 148A notice for such transaction? As assessing officer will consider the net effect, and here net effect is 0.
That is for in which financial year he has deposited, in which financial year following year?
So in one financial year he deposited, in another
1 year,
financial
okay, sir. Whether that 1 year is what, which year?
No, that has not been mentioned.
Okay.
So in 1 year, 15 lakhs got deposited.
My point is, sir, if the source is there for deposit, and if it is within 3 years, the provision gave us to go back and file earlier returns. If it fits within that 23 March over 22 March 21, 2021, 21, 22, 22, 23 financial years means I would take a course of action. I will voluntarily file, even if there is no taxable income, if there is a source. Prior to that, we don't know whether we get a 148 or not, but more than 3 years, they cannot go if it is below 50 lakhs. If it is below 3 years, financially 2021 or 21-22 or 22-23, we can file a return. Though they have a choice or a power to issue 148A. I always advise people to file voluntarily, even if he has lower than the exemption limit, because of continuity of file, balance sheet water, and to obtain a loan from a bank. And they ask for 3 consecutive years to serve those purposes and for continuing the balance sheet. Even if there are no books of account, at least prepared a cash flow statement like that P&L balance sheet. We will know how much capital he is having, how much cash or debtors receivable or whatever. So otherwise, if there is a big break, how come the department knows he has that much amount in hand to buy or purchase or investment or spend on a function or whatever? So I would advise them to file, my clients. The gentleman has to take his own call. And my case, sir, is a bank, another similar one. That lady, mother, she got funds from her father-in-law, husband. All of them are having agricultural lands and proportionate income only transferred to her for the purpose of sending her son to Australia for education. Earlier, they have some fixed deposits. They were all closed, prematurely closed. They remitted, say, 21 lakhs plus foreign exchange commission, 4,000 or something. Husband did 18-19, sir. We received recently in March 23. So bank sent different codes. 21 lakh 5,000 we received currency, Indian currency, for remitting as a foreign exchange, and we remitted Australian dollars equal to 21 lakhs Indian rupees. Both codes came. In our reply, we submitted the statements of accounts, all the 3 bank accounts, all the 3 passbooks having 2 areas, something like that. They are having 2 different villages, all of them. And FDs matured, bank manager issued a certificate. Those are the credits after the premature closure of FD accounts. Everything done, including this foreign exchange transaction, clarified manager in a certificate. Still, notice calling for a return of income under 148K. So we are filing.
Right, sir.
We'll submit to the NAFAC.
Next question is, some of the tax practitioners are of the view that according to CBDT instructions, the limit for issuing notice under section 148A is 20 lakhs in case of urban areas, 10 lakhs in case of rural areas for cash deposits.
Earlier you covered, sir, that the code information 20 lakhs also
Yes.
goes.
Yes, 10
And
lakhs.
so ITPs, they may say something, we cannot be equal to them. Accountants may say something, we cannot answer them. We can only tell our professional brothers, not to the.
Right. The next question is, under 148A, AO can give extended time on request from SC.
Reasonable cause.
What is the corresponding situation in section 148? 148, 30 days, they have to file the return of income and submit the information within the time limit specified. There also, when requested, maybe 1 or 2 times, they are getting the adjournments, I think.
Yes, sir. Yes, sir. Yes, sir. I always try to file before, sir.
Yes.
That is what I told. 6th March, they gave no time up to 15th March. Still, I replied by 13th March like that.
Right.
I don't wait for the due date, because on the given day I may be or I may not be available, or he may not be available.
Yes.
So I do it 3 days prior, like paying a power bill. Otherwise, they may disconnect.
That is always a best practice, sir. A day or 2 beforehand will always be helpful in the SSC's cause.
Not
So
only,
next-
sir, my client doctor, he pays the bill on the second day on which he receives telephone bill or electricity bill. That is a piece of advice to me.
Yes, utility bills and statutory payments to be done in time, or statutory compliances are to be made within the given time. So that's a good best practice.
Even to save from penalties, if we track the see on the record, for the last 5-6 years, every time we paid sufficient advance tax, filed returns before the due dates. So when time there is a small minor aberration or a violation or whatever deviation, we can pray to the department, sir, please, we are abiding tax paying citizens. At least you have discretionary power not to leave penalty, please. That plea helps us. Record speaks on behalf of us.
Yes. So the last question in the chat box, sir. My client entered into development agreement worth 1.7 crores in financial year 15-16, resulted in capital gain of 35 lakhs without any exemption,
Yes.
no other income. AO
Yes.
decided it to be fit case for 148. I wish to go for a writ. Am I correct?
Yes, sir. That is a Pandora box, sir. That time, real time GPA come sale agreements, development come GPA, whatever sale. I have only one client at that time have that facts. In Vizag, he gave a chunk of land, 5 acres, something, NRI. That builder is smart. He is NRI. Has taken him for a ride. 2 towers they raised, sir. 1 tower they put up slabs. Both towers put up slabs. And usually 101 flat number builder, 102 landlord, like that they take. In that agreement, 1 block is for the builder, 1 block is for the landlord. Builder completed his block and sold and gone. Landlord portion building only slabs. So we paid tax at that time. It is in the same stage. Because he is NRI making good money, he could withstand that loss. Otherwise, we would file insolvency petition or whatever.
Yes, sir. To
This
supplement-
case, I think we have to speak to senior advocates.
Yes, yes, sir. That's what I'm saying. To supplement your answer, yesterday also we have listened to one of the senior chartered accountant, CAE Falgun Kumar sir, and also advocate Manmohan Dundu sir. In that conversation, what has been mentioned is that if the taxable income or income escaping assessment did not exceed 50 lakhs, the reopening period is only 3 years. Now, the facts of the case as mentioned by you state that even after 3 years, though the income is less than 50 lakhs, as contended by the SSC, the 148 notice has been issued, that is 148A-D along with 148 notice has been issued. Now, yesterday what the discussion went on was that, right, if a writ petition is filed, at the time of going through the arguments, the judge may opine, the honorable judge may opine that once you have alternative remedies available with you, instead of coming to High Court with a writ petition, you can pursue that alternative remedy. Since 148 has already been issued, you may prefer or you may file your return of income, present your case and offer that income as 35 lakhs. But the another question here arises, now if it be the time barred situation, even the tax on the 35 lakhs need not be paid might be the contention of the SSC. Yes, of course, there is no bar on going for a writ petition. But the only thing that has to be examined is whether it will be entertained as they are there are other alternative recourses that can be resorted to.
Sir, whether I missed, whether they paid tax during that time?
No, actually, the development agreement wherein the 35 lakhs capital gain which is arrived, that transaction, as per my understanding of the question, the transaction might not have been reported.
If they have paid, okay, this question does not arise.
Yes. So with that note, I'm afraid we have come to the conclusion of this session. No, and the supplementary question is that, or the additional information provided by the queryist is that they are of the view that it is exempt income. Now, if it is exempt income and that then very well section return can be filed under section 148 and the representation can be made before the assessment officer. Of course, there is no bar for going to a writ petition, but the maintainability of the writ petition.
Every petition may not be admitted, sir.
Yes.
Yes. Also, second hearing, they tested because he is a senior advocate having served in the ITAT as vice president in 5 states. Department always starts with the same what you said. They have alternative remedy.
Yes.
By filing an appeal by filing a return after receiving a demand, by filing CIT appeal and a tribunal or whatever. But it is a long-term process, and my case, my SSC facts, he owns nothing. He has been into fish culture, taken some fish tanks on lease, and he has only one son in US. He lives in a rented house, not even 1 inch of land in India, not even 50,000 balance in his account, not even 250 grams of gold is for his wife. That is his state. Then people asked me, even the departmental officer friends, how come you can afford filing a writ petition? I said, the demand I calculated is something running into lakhs. Instead of that, we will borrow amount because he has got goodwill in the market over a period of 15-20 years. He pays rent fish tank lease on time. So even the landlord will postpone taking the rent. That much promise he has got. So that we will spend to get a quick remedy. And we thought of 6 months or more, but we got in 4 months. Instead of 3-4 years in 2 forums. Right.
Okay. So with that note, sir, MR sir, thank you very much for your time. And you have taken all the pain in preparing those articles. And also you have explained it to us going into the legal aspects as well as factual aspects and the practical situations that are being faced by the SSCs in respect of these 148 notices. So thank you very much. You have conceptualized, coordinated, and seen through these 2 sessions on 148, as well as this 69 series, as well as the sections referring to the tax rates of unaccounted or unexplained investments or deposits. And also we also went through the various sources from where the department will be getting information like a CIB as well as a statement of financial transactions. So thank you, everyone. We will, yes, sir, your closing remark.
Yesterday, the number is 135 participants. Last about 45, 1/3. Today, I have seen 40 plus or so. 43, now 25. We retained 60% audience.
It will be like that, sir. Actually, the
no, 60%, that is 33%.
Yes, they sticked on to your presentation. So that night note, and this program is this video is will be available on YouTube channel of Vijayawada branch, which will be available for replace any number of times. You can watch at your convenience. But for now, good night. See you next time.
Have a nice weekend, all of you.